I have heard about the premium and discount zone, but I don't know what it is or how to use it. Does that apply to you? Search no more, because by the end of this video, you will not only know what a discount and premium zone is, but you will also learn how to use it and use it the right way. And you will also learn when to use it and when not to make use of the discount and premium zone. Okay. But if this is your first time of coming across my channel, ensure to hit the subscribe button, give it a thumbs up so that YouTube will recommend it to more people that will find content like this interesting. In this video, I'm going to show you how to trade using the discount and premium zone. First things first, let us know what the discount and premium zone is all about. In trading, especially smart money concept style, that is the SMC style, discount and premium zones help you determine whether price is cheap or expensive within a specific range. Think of it, think of the market like a business. You buy low, you sell high. But instead of guessing, traders use a defined price range to measure this. Now, the zones are being explained right here. The discount zone, which is your buy area, should be below the 50% level. Now, remember in our last video, if you haven't watched the video where I talked about Fibonacci, you should also go and watch it, because it is going to help you to understand what I am going to explain on this particular video. Now, you can see here, they say the discount zone is below the 50% level. Price is considered cheap, best place to look for buy opportunities. While the premium zone, that is the sell area, is above the 50% level. Let me just say the 50% Fibonacci level. Price is considered expensive, best place to look for selling opportunities. Okay, how it connects with Fibonacci. This is where it gets powerful. Discount zone ranges from 0% to 50% Fibonacci, and premium zone ranges from 50% to 100% Fibonacci. Many traders refine entry further using the 61.8%, that is the deep discount or premium, or the 78%, that is optimal trade entry in SMC. Just as I explained to you when I was talking about Fibonacci, I prefer entering the market, be it Fibonacci or the premium or discount zone, when price gets to the 78% retracement zone. Okay, now how to use it properly. In an uptrend, wait for price to retrace into a discount zone, look for bullish confirmation or other block, then you buy. Then in a downtrend, wait for price to retrace into a premium zone, look for a bearish confirmation. It could be also an order block or a supply zone, then you sell. Now, there are common mistakes to avoid using it without identifying the trend. This particular discount and premium zone works well when the market is trending. It works well when the market is trending. It's either the market is in an uptrend or the market is in a downtrend. You don't want to be using it when the market is consolidating. Okay, drawing from a wrong swing point. You don't want to be drawing it from a wrong swing point. And I'll also show you the proper way to draw this particular tool, right? Entering without confirmation. You want to rush into the market. The price hasn't even pulled back into your discount zone or your premium zone, but you just want to rush. It is not a standalone tool. You need to apply it with other confirmation to be able to be certain that that particular zone is a valid point of interest or a valid point to enter the market, right? Pro tip: discount and premium zone are not entry signals. Now, if you've heard that there are entry signals, it is not an entry signal. Rather, they are location tools, where to enter, where to trade, not when to enter, right? That is why I said you have to make use of it with other confluences to be able to say, okay, this is my point of entry, right? Now I'm going to head over to my chart. Let us see how this works in real time. Without wasting much of your time, let's go. All right, you remember in our explanation, I said the premium and discount zone is connected to the Fibonacci, right? When it is below the 0.5, it is the discount zone, and when it is above the 0.5, it is the premium zone. Okay, now let me bring out my Fibonacci tool. Let me draw it this way. Now this is our 0.5, or we can call it the 50% retracement zone. Okay, now this tiny line at the middle is what is differentiating the premium zone from the discount zone. Anything above here is the premium zone, and anything below here is the discount zone. Now let us give a quick example. Whatever I'm going to explain here is also applicable to an uptrend. Now this is a chart on USD CHF, the 4-hour time frame, and as you can see, price is consistently giving us a lower high, lower low, lower high, lower low, lower high, lower low, and so on and so forth. Now if I'm to come into this trade, remember, you do not just say from the video explanation we said as long as it is below the 50% retracement zone, it is counted as a discount area, and if it is above the 50% retracement zone, it is a premium area. No, the question now is, which Fibonacci sequence do you want price to retrace into before you can start counting it as a discount or premium zone, right? As a discount or premium zone, because anything below here is counted as discount. So which particular sequence? Is it the 61.8% retracement or 78.6% retracement? Now, ideally, I go for the 0.786, that is the 78% retracement, this yellow bar. I want price to come into this bar before I can count it as a discount area for me to start looking for buying opportunities. And if I'm if I'm selling, this will be my premium and this will be my discount. This will be my premium and this will be my discount. So if I'm selling, I want price to retrace into still the 78% retracement before I can say, okay, I can start selling at this particular zone. Remember, we buy cheap and we sell expensive, or we sell high. Okay, so that is it. Now looking at this chart, you can see that this is in a downtrend. If I'm to come into this chart and I want to make use of my Fibonacci to be able to tell me that, okay, this is a downtrend, let me start looking for areas where I can start buying expensive. Where is that premium zone that I want to be looking for price to buy from? I will just bring out my Fibonacci, draw from swing high to swing low. Remember, on a downtrend, you are drawing from the swing high to the swing low, whereas on an uptrend, you are drawing from a swing low to a swing high. And as I said, I will want price to react from this yellow bar right here, the 0.786, that is the 78.6% retracement zone. It is at this zone that I will now say, okay, price is expensive enough for me to start looking for selling opportunities, right? Same thing, if I was to enter this particular trade, I would have closed in massive profit. Then at the point of the retracement, if I should carry my tool again and draw from swing high to swing low, you can see how price nicely came into our 78.6% retracement and dished out this beautiful move right here. Okay, if I'm to look for another entry, I will take it from the recent high. I will take it from the recent high to the recent low and drag it all the way down. And as you can see, you see that price came into this particular zone, then it dished out this nice selling momentum. So this is how it works on a bearish market. You can see right here, price came into our 78.6% retracement, even though it went above it a bit, but it still dished out this nice move. Now let us look for an example in a scenario where we are buying. All right, let's use the dollar index as an example for the buys. Now remember, when we were looking at the sell, we said you want to take it from the most recent swing high to the most recent swing low, wait for price to pull into the discount zone, and we said our discount zone, the discount zone we will be looking at was the 78% retracement. Using the dollar index for the buy example, the same thing applies, but the difference here now is this particular red zone is up. But while we were looking at the sell example, this red zone was down. It doesn't matter, right? All that matters is wait for price to retrace into this particular yellow bar. This is a discount zone for you to buy. You are buying cheap, right? While when we were doing for the sell example, we were selling expensive. You want to buy a plot of land at the rate of 2 million naira so that in the next 2 to 3 to 4 months, you are selling it at the rate of 2.5 million. That is how the discount and premium works. There is no fancy ideology around it, and also there is no specific time frame where you can use this particular concept, right? You use it on your entry time frame. But also remember, it is not a standalone confluence. You have to make use of it with other confluence for extra confirmation. Okay, you can see immediately I drew this, price retraced into our yellow bar, then moved up. Okay, now this was where price retraced into. If I should draw it from here and drag it all the way up here after a break of structure has occurred, you can see that price came back again inside our 78.6 retracement zone, then pushed up. That is how the discount and premium zone works. There is no magic to it. Okay, so if you enjoy this video, make sure to subscribe to the channel and leave me a thumbs up so that YouTube can recommend this video to people that might find content like this interesting. Without wasting much time, see you on my other video. Stay blessed.